Is everything happening right now bullish for the cryptocurrency space as an asset class? Well, on the surface of it, it certainly appears not. Obviously, on the back end of Trump's tariffs, we have seen a lot of questions being raised, a lot of uncertainty being introduced into the markets, and projections in regards to economies moving forwards get downgraded massively. Now, that of course is causing the stock market to sell off. And rather interestingly, and relating it to this video, also the bond market. Now, the modern day portfolio theory, which most hedge fund managers out there will follow, is a 60-40 split, a 60% equity to 40% bond holdings that essentially will protect you at times of uncertainty or perhaps recessions like what we may be facing on the back end of tariffs. But the conundrum right now is that the bond market is actually selling off with the equity market. And over the past 24, 48 hours, we've seen yields on the bonds spike and we've seen bonds decline. Now, there could be a very explainable reason to this, and that is that the likes of China may be dumping US holdings. However, there is a broader problem with the bond market, not just in regards to its size, but in regards to what the Fed are currently doing and how they're not actually stepping in and supporting the market, which means who is. And right now, it's not really anyone, hence the prices of bonds are selling off. And the interesting thing is, despite there being a lot of recessionary fear, JP Morgan, BlackRock, and Morgan Stanley, essentially all now predicting higher likelihoods, if not high likelihoods of recessions, the bond market, which typically does well in that environment and has acted as a safe harbor, essentially is selling off with equities. So it puts an interesting spin on modern day portfolio theory. And this is where I'm going to relate this to the cryptocurrency space. Because the cryptocurrency space is a new asset class that we're yet to see how it fares in perhaps a recession or times of max uncertainty. We know Bitcoin, for example, has huge buoyancy, certainly around geopolitical events. I'll put the BlackRock chart up here. And actually, we are going to be talking about BlackRock's recent letter, very timely to their investors, that essentially speaks about how this traditional portfolio split is now going to be changed. And actually what they're putting forward is a 50% equity, 30% bond, 20% other asset class theory moving forward. And what's going to be a part of that? Well, we know BlackRock have already spoken about an ideal 1 to 2% Bitcoin. I think that will grow, certainly as the case gets proven, but actually it will open up to the cryptocurrency asset class more broadly, which is on the cusp of institutional adoption through ETF applications. So there is, and I hope you're following my train of thought here, actually a very bullish spin you can put on all of this, theoretical bullish spin, I guess, in regards to this new asset class that is the cryptocurrency space, and the old way of doing things potentially going out the window or being viewed in a different manner. Now, what I want to do, as I've mentioned BlackRock's potential shift from 60-40 to 50-30-20, is actually read what they had to say about this, and I'll throw it on screen. In Larry Fink's letter to investors, he said, from 60-40 to 50-30-20, the beauty of investing in private markets isn't about owning a particular bridge, tunnel, or mid-sized company. It's how these assets complement your stocks and bond diversification. Diversification has been called the only free lunch. It's essentially what alpha is in regards to portfolio terminology. It was the motivating idea that led Nobel Prize-winning economists like Harry and Bill Sharpe to develop modern portfolio theory, which became the foundations for the standard portfolio of roughly 60% stocks and 40% bonds. Generations of investors have done well following this approach, owning a mix of the entire market rather than individual securities. But as the global financial system continues to evolve, the classic 60-40 portfolio no longer fully represents true diversification. Now, it's very interesting that they're releasing this at a time when the cryptocurrency space has sprung onto the scene, and actually this entire letter to investors was all around democratization of markets. And essentially, in my opinion, how blockchains are going to enable markets that were not accessible to investors to now be, through tokenization, also create entirely new markets in doing so. that BlackRock, following their ETF launch, released a report titled Bitcoin, a unique diversifier, where they actually tout it as a risk-off asset, which is interesting because it moves very closely with risk-on assets like equities. However, they're essentially putting it forward as a unique diversifier, which is what BlackRock themselves are saying is going to have to happen in regards to portfolio management and move away from that 60-40 split into a 50-30-20 split. Now, my money is on the table in regards to that 20% involved in cryptocurrencies, and most definitely Bitcoin, which is still the king of the cryptocurrency space. Very unique. I think the Bitcoin maxis fundamentally get things wrong when they look at other projects as trying to be Bitcoin. Blockchain and its applications have moved on from that. Not that that isn't a colossal use case, and Bitcoin is the king of it, and we're a Bitcoin maxi in that sense, but the industry as a whole has figured out how to use this technology for more than just sending emails. Now, one of the arguments they put forward here is the fact that it is not correlated to other assets, and they go on to say an uncorrelated asset. Bitcoin reflects little fundamental exposure to other macro variables, explaining its low long-term average correlation with equities and other risk assets. While there have been brief periods where Bitcoin has seen its correlation spike, particularly around episodes of sudden shifts in the US dollar real interest rates or liquidity, these episodes have been short-term in nature and have failed to produce a long-term, statistically significant correlation relationship. And you can see they have this underneath. Bitcoin, as the first decentralized non-sovereign monetary alternative to gain widespread global adoption, has no traditional counterparty risk, depends on no centralized system, and is not driven by any one country's fortune. These properties make it an asset that is largely detached on fundamentals from certain critical macro risk factors, including banking system crises, sovereign debt crises, currency debasement, geopolitical disruption, and other country-specific political and economic risks. Over the long term, Bitcoin's adoption trajectory is likely to be driven by the degree of which concerns rise and fall over global monetary instability, geopolitical disharmony, US fiscal sustainability, and US political sustainability. Because of these attributes, Bitcoin has been seen by some investors as a flight to safety in times of fear amid some of the most disruptive global events over the last 5 years. Notably, in some of these instances, Bitcoin first exhibited a temporary negative reaction before subsequently rallying. In our view, these short-term trading reactions, which are often difficult to explain based on fundamentals, can be attributed to a combination of the fact that Bitcoin is an asset that trades 24/7 and settles to cash near instantly, making it a highly available asset during periods of stressed liquidity in traditional markets, particularly over weekends. A function of the still immature nature of Bitcoin and crypto asset market and investors' understanding around Bitcoin. In most instances, including the recent global market sell-off of August 5th, 2024, not that long ago, Bitcoin has recovered back to its prior level within days or weeks, and in many cases rallied further as a recognition of the positive potential impact of such disruptive events on Bitcoin's fundamentals begin to predominate. You can see they've highlighted a number of events and how well Bitcoin versus gold in the S&P has done post. So on the surface of things, these events ultimately, and Bitcoin's held up remarkably well considering how badly the stock market's gone down. On the surface of things, you would expect Bitcoin to be correlated to markets, certainly if the worst fears that are being circulated right now do happen to come to fruition. In actual fact, the contrary could be true. It actually could perform exceptionally well and cement itself in what is a monumental shift that is likely going to be undertaken by every asset manager around the world, and that is to move away from this 60-40 split that may not work given the conditions that we're in. It still may, but there is no harm in diversification. You know, it's one of the only free lunches that there are, if free lunches are even a thing, and actually cement itself in everybody's portfolios. And that doesn't just translate to Bitcoin, but these other global in nature cryptocurrency assets that the very future financial system is going to be ran upon. Go on and on and on about stable coins or a variety of other things, but this was just a short and sweet video. It's also very interesting just to throw this in there. When you look at the Bitcoin SPY chart, it's in a clear uptrend against it. It's broken into new all-time highs, it's retested them, as you're likely going to see continuation, which means that this chart essentially is predicting Bitcoin's going to do well against the SPY, which you'd expect to happen in an environment where the SPY is going up. It could happen in an environment when the SPY is going down. Now, I'm still hopeful that there's going to be a resolve to all of this in regards to the tariff situation, and they may just be a bargaining chip that may result in lower tariffs across the board. But if the worst is to play out, actually this is going to be a real opportunity for Bitcoin in the cryptocurrency space at large, and I truly, truly believe that. I want to know your thoughts in the comment section, guys. We just thought we'd do a slightly different video with a bit of a view, not that I'm not enough, and also we've got a nice castle. That's one of the beautiful things about the UK, is all the kind of old architecture that you just find scattered about in a nice little location to come and sit and enjoy the sun. That's it from me, guys. I'm going to love and leave you. Thanks for watching. See you all soon.